Hey, and welcome back to the channel. We have a lot to cover in this week's video. We're going to talk about all things from the inflation numbers, what that means for the next Bank of Canada rate announcement. We're going to talk about the trade war that's brewing between Canada and the US, what that means specifically for home building and for the Vancouver real estate market moving forward this year. Real quick, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. When I'm not making videos like this, I'm helping people just like you buy and sell real estate across the Lower Mainland. So if that sounds interesting to you and you want to chat with me one-on-one about your real estate situation, you can book me for a free call in the Calendly link below or on screen, and subscribe to this channel so you don't miss a future video. All right, hope you had a wonderful week. We have lots to cover, so I'm going to jump right into it. We'll talk very briefly about inflation. Inflation ticked upwards to 1.9% in Canada, but overall, relatively flat over the last few announcements, and we're right in that target range of what the Bank of Canada is looking for at 2% essentially. Now, what was factored into this last set of inflation numbers, GST holiday, a full month of GST holiday, which would have brought that number down, and then what essentially brought the number up, gasoline prices, energy prices, core inflation, which is more important, I guess you could say, to the Bank of Canada, also ticked upwards, but again, we're within their target range and we've kind of been hovering at that mark for a little while now. So the next rate announcement coming up in March, it's a little bit up in the air what they may do. It's either going to be a rate hold or it's going to be another rate cut. And really the big determinant is what's the outlook going to look like moving forward when it comes to all of this animosity and this trade war talk, I guess you could say, between Canada and the US. The interesting thing is the next rate announcement is on March 12th. That is also the same date that Trump has signed in tariffs on steel and aluminum, blanket tariffs for all countries that will take into effect on March 12th. So set that date in your calendar. That's going to be a very interesting and impactful day for us here in Canada. So it's really up in the air whether we're going to see a rate cut, whether we're going to see a rate hold, and truthfully, the Bank of Canada probably doesn't know as well. The way that we've seen President Trump in the South kind of shift his decision making. We were supposed to have tariffs, I believe, as of February 1st. Canada counterattacks those tariffs, and then they're off the table for now. I think ultimately what we can derive from our current situation as we tie it into real estate, a couple of things. Number one, uncertainty. That's going to be the theme of 2025. Erratic movements, erratic decision making coming from the South. Now, the initial set of tariffs, I wouldn't say, in my opinion, if I'm guessing, that they're completely off the table. I think the US was not expecting Canada to retaliate so heavily. And I think they're taking their time now to say, okay, if we are to still move forward with these tariffs, and Trump has said that these tariffs would, the 25% on steel and aluminum would be on top of the other tariffs. I think they're actually now doing a study to say, okay, what exactly are going to be the effects when Canada places their counter tariffs. But let's talk about, how does this all affect home building, and then how does this actually affect, real estate on the consumer side? Steel and aluminum tariffs is going to impact the home building market, here in Canada. And a lot of people, they look at that at face value and they say, okay, if there's tariffs on, steel and aluminum, that means demand for this product within our borders will shrink. And so that means those prices must come down. And so it's going to be cheaper to build. And the reality is, it does not work that way. It's actually going to be the opposite. What ultimately happens is if there's less of a need for supply, demand drops for steel and aluminum here in Canada, those manufacturers are not going to supply as much product, right? Think about it, you and I, like if we were business owners and demand for our product now drops, we're going to create less of that product. We're not going to oversupply. We're not going to throw a bunch of supply into the market when it's not going to be consumed, when we're not going to get paid back for that supply. So, the supply drops, and when the supply drops for these manufacturers, they lose economies of scale when it comes to manufacturing the product, meaning that when you're supplying less, when you're creating less, your cost goes up. And so the suppliers are going to have to make more margin. They're going to have to charge more for their product. And if that doesn't get consumed by the market, if that price is too high, you have, unfortunately, companies going out of business. Ultimately, you still have a supply problem. So that's number one, is costs go up in that regard. And number two, I think we can say with relative assuredness is that Canada will counterattack with their own set of tariffs. We know that because of the tariffs that were almost placed and Canada responding very quickly. What do those counter tariffs look like? And no one has any idea. We don't know what products they might be on. Will that affect, home builders here? Very likely to affect home building on this side. I was reading the CMHC 2025, outlook for what they believe is going to happen in the real estate market. And, overall, they felt that, resale activity is going to be relatively strong, especially compared to the pre-sale market. And so, pre-sale home building already down. And the thing about, pre-sale and home construction, you have the city fees that, just in taxes, 30% adding to the cost of building a home. Just in taxes, you have, if materials go up further, labor tough to come by, all of these costs going up. And so developers are forced to pass these costs down to consumers. And the way it works with pre-sales is, you go to a pre-sale center and suppose they just launched, you're going there and you write your contract, and boom, you've bought a pre-sale. It's now past the 7-day rescission period. You're good to go, right? You just have to wait until this product is complete. But what some people don't realize is that developer now has to sell a certain amount of units to be able to obtain their financing and actually move forward with the product. And they have a year to do that. And so you're sitting there for a year not knowing for certain that the developer is going to hit their minimum quantity product and that they're actually going to move forward. And so sometimes what happens at the year mark is they don't hit the minimum and then deposits go back and you haven't bought that pre-sale. And the question to ask yourself is, how much has the market moved during that time? How much has my deposit money devalued during that time? Now, the benefit about pre-sale deposits is you do pay them staggered in that first year, so that's good. But we're also seeing instances where developers have hit the minimum and that project is still not getting off the ground 2, 3, 4 years later as you head towards what's called an outside date. So you stack in all this cost into a developer, they're going to have to pass that down to the consumer. Demand for this product drops down, and now their ability to hit these pre-sale minimums becomes, even more difficult to do. So the way CMHC and also other industry professionals, people that sell real estate like myself, day in and day out, we see it happening as well, that, this demand for the new construction product in pre-sale has fallen drastically. And so, ultimately what ends up happening, or what's going to end up happening, is you get to the year mark and maybe the developer hasn't sold enough units. The developer is going to have to make a choice now. They're going to either pass back the deposits, or some developers, if they can do it, they may choose to take on more risk. And by taking on more risk, I mean injecting more of their own capital, getting alternate funding that may come at a higher cost, just so that they can get the financing in time. And so how many developers are going to want to take on this risk? And so when it comes to a home building perspective, bringing this all together, this year of uncertainty, 2025, one thing I can say certainly is that costs will continue to go up for new home builds. And so this is going to affect supply. The interesting thing about home supply, though, especially if we look at the condo market right now, condo market supply is as high as it's ever been. At least in the last 10, 15 years, the new listing supply in condos has shot right up. Now, I did a video, I don't know if it was last video or the one before, where I try not to look at the new listing number because it does factor in a lot of cancels and relists, but you talk to anybody in real estate and will tell you the condo supply, especially in certain pockets, is large and it continues to grow. I had someone reach out to me, asking about pre-sales and saying, hey, like is now the time to buy pre-sales? And I think for certain types of buyers that maybe can't get financing today, they don't have any short-term moving plans they need to make. Sure, I think certain pre-sales, being very particular of the pre-sale that you're purchasing into, can make a lot of sense. But for me, the value is by far in the near new condo market, by far. Lots of opportunity, priced well below what new pre-sales are selling for. I had someone else reach out to me and say, okay, well, what about assignments then? You hear about this pain in the market where, people purchased these pre-sales 2-3 years ago, and now, they're down, they're underwater. They want to get rid of these pre-sales. In a certain amount of instances, they're, struggling to complete. Can we get deals in the pre-sale market? Can we basically, purchase it well below what an original purchaser's cost might be? And if you followed my channel for any amount of time, I started this channel in 2020. My whole shtick for like 6 or 8 months was doing a series of videos on all of the risks that pertain to pre-sale, covering basically everything, going deep into disclosure statements, covering it all. And truth be told, a lot of these risks are now coming out to fruition over the last couple of years. But what I'm finding in that assignment market, especially on this side of the Fraser River, in the Fraser Valley, I think there's maybe a little bit more opportunity for someone who's struggling to complete, for someone to purchase an assignment and get a great deal there. Here I'm finding that most are just not willing to lose that type of money as an assignment, especially if they have the ability to complete. They will likely, complete that product and list it right away. Sometimes at the same time listing it on both the rental market and the sale market. And they want to give it a shot selling as a completed product. Your chance of success at selling that product increases greatly when it's a finished product that people can walk into, they can touch, they can feel, we can stage up the unit. So, I'm not seeing a lot of instances where, you're able to buy these, assignments, 10% below, what that original purchaser paid. And keeping in mind that the original purchaser at this point likely bought that in 2021, 2022, they bought that at, significant peak prices. So even if you were to get it for a little bit less than what they paid, you're not actually getting value. And again, I circle back to the resale market. The reason I mention it as well is in the CMHC report too, that they think resale activity will, pick back up, and that pre-sale will be hindered. So we're in kind of a weird time frame, and I say this is a weird time frame because I've been on the planet for over 40 years now, and I've monitored real estate to some degree for 15 plus years. I bought my first property probably about 20 years ago, and typically how the market has overall worked when we've seen cycles is, and I'm going to use the term loosely, take advantage of, but often in down markets we see investors take advantage of the consumer. And what I mean by that is we hit hard times, people lose their jobs, economy is struggling, consumers bite off more than they can chew. They have to lose their home, sometimes in foreclosure scenarios, and the investor swoops in, buys at pennies on the dollar, and they buy and hold, and they just wait for that property to go up. And this has been historically how it works, and probably why investors have gotten a bad name over a long period of time. 2025 is the reversal of those roles. And what I mean by that is, you can say what you want about this provincial government we have in place, but they are doing exactly what they said they were going to do. And that is basically kill investment in this province, totally detract anyone from investing, whether it's on the housing side, whether it's, starting your own business, becoming an entrepreneur in this province. This government does not promote that, does not like that. And so what we're finding is through their policies, extension of foreign buyer ban, which I'll touch on again in a sec, the short-term rental legislation, the tenancy laws affecting long-term tenants much more than the property owners themselves. They have targeted investors now to the point where investors are saying, I'm done with it. I'm putting my units on the market. And so this is the year where the end user or the consumer has the opportunity to, again, using the term lightly, take advantage of the investor who maybe bought it at a higher price, just wants to offload it, doesn't want to deal with the tenancy laws here in BC. It's the end user, it's the consumer's time to shine in that regard. But the way that an end user or a consumer thinks about a real estate purchase, and I'm sure a lot of you watching this video are a potential end user, someone that's going to move into the property. You're buying a home because it's a home. You're not doing that because this is the perfect time to buy. You're doing that because some sort of life instance is happening, is occurring, and it's making you need to look at purchasing a home. Maybe you're a tenant and there's rumblings that your landlord wants to sell. And so you're saying, okay, the time has to be in the next 3 to 6 months. Let's try and find something. Or maybe your job is transferring you somewhere. Or maybe you just got engaged. And if you did, congratulations to you. But maybe that's your reason for purchasing a property. So, for someone like myself, a real estate agent, I work with the full scope of clients. I'm probably one of the rare agents out there that works with people all the way from, first-time home buyers. A lot of them I meet through this channel, right up to I have some clients that have, multiple 15, 20, 30 plus properties and large portfolios. So I get to see the spectrum of how everyone thinks differently. And for the end user, who again, I think has that opportunity, especially in the condo market this year, the way they look at it is the life instance happens and then they reach out, or that instance is going to occur, and then they reach out and say, hey, I need to buy in the next this amount of time. Is it a good time to buy? And, this is a year where we're going to have the conversation where, the opportunity is really great. But sometimes though, they might reach out when that life instance happens. We're in a seller's market. It doesn't change them making their purchase or not. So they're not the type that are just looking for the right opportunity to take advantage of the market. Whereas some of my investor clients, most of them will say, look, I'm not in a rush. This is what I'm trying to achieve. I can wait. Reach out to me when you're able to make this happen. And that's the conversation. It's a very different, it's open-ended time-wise, where an end user, it's a very closed time frame. Now, I want to just quickly circle this back to the tariffs and what might occur here in BC and in Canada. I mentioned how BC has not been friendly to the investor. They have not been friendly to the foreign buyer. Foreign buyer ban extended nationally for an additional 2 years. So it first came into play 2022, an additional 2 years to 2027, and you gotta look at it now, because it's almost like BC and Canada have thought, what, we don't need you. We don't need your foreign investment. We no longer need, your immigration to our country. They're probably thinking in their heads, well, we get so much business from the US. Our dollar is so attractive to American companies. They're just going to continue to spend and help boost our economy, our biggest trading partner. And now you have the US coming out and saying, we don't think we need you as much. We don't believe we need you. And so if you don't think that this tariffs situation is not a major thing, you're going to want to revisit that thought, because this is massively significant. I think over the last few years, I feel like Canada has really kicked investors, not just here, but also foreign investors, has really said, look, we don't need you. You want to grow a business. This isn't the place for you. Through taxation, through policy, whatever it might be. Now you have basically our biggest client, if you will, threatening a trade war, a negative trade relationship. And you got to look at things like the foreign buyer ban, circling back to how I talked about pre-sales. I know the home building community is looking at it and saying, is now the time that we open the door to foreign investment into our pre-sales? We allow foreign buyers to buy pre-sales again? Can we create a scenario where they're buying pre-sales, but they have to maybe rent it out for a period of years before they actually move into it? Like, how can we get more creative to actually open the door so that we get these pre-sale buyers in, so we're able to complete the projects and put that supply back into the market? And I think now we have to be, as a country and a province, we have to be even more creative and even more open-minded with our relationships with countries outside of the US. And truthfully, I think federally and provincially, we completely lost sight of that. And now the governments are shook because they have taken for granted some business that comes, a large chunk of business that comes from south of the border, and now realizing that we need to open the doors to foreign investment. I had someone message me about the immigration policies, and we're looking at basically 0%, population growth over the next year or two, and what's the effect going to be on housing and prices. I think we're already seeing in the rental market, we're seeing rent prices drop. But I don't think it lasts. I don't think 0% population growth lasts. I don't think our economy lasts without us opening the doors to immigration. If you think about, for example, pandemic period, the federal government was worried that the economy was going to crash and we're in a bad place. So they just basically open up the borders and let anyone in. Now, the one similarity you can draw from now to pandemic is the federal government is worried that the economy is going to crash. So what can they do? They can't control the Bank of Canada, what they do with the rate, and it's possible that the rate remains flat. So what can they actually do to kind of boost the economy and boost spending? They can open the doors to immigration, probably in a much more targeted sense. Bringing in high income earners, doing their best to entice and appease them to come to Canada to spend money here. So, the 0% population growth, all of this immigration reform, I don't think that it's going to be extremely long-lived. But, one thing is for certain, we're in for an interesting 2025 in the real estate market. So there you have it, guys. I'm sorry I went a little bit over time in this video, but I hope that you enjoyed it. If you did, hit the like button. What that does is it takes the video and it sends it out to more people so they can also learn from it. And again, if you're in the Vancouver area or the Fraser Valley, you want to chat with me one-on-one about your real estate situation, you can book me for a call, or you can just give me a call. Send me a text, shoot me an email, whatever is easiest for you. I would love to chat with you, but I want to thank you for watching this week's video, and I look forward to seeing you next week.